Hello, everyone, and welcome to TelecomTalk Live. Today, we are joined by Mr. Andrew Bonwick, President of Product and Development at Relm Insurance, who leads the company's initiative across the space economy and emerging technology sectors. With over 15 years of experience across insurance law, underwriting strategy, and product innovation, Andrew worked at the intersection of satellite connectivity, AI, and next generation digital infrastructure. Andrew, it's great to have you with us today.
Lovely. Great to meet you.
Great to meet you.
Andrew, could you please tell me what exactly your company does?
So Relm is a Bermuda registered insurer. We're also officed in New York, Miami, London, and Dubai in the UAE. Our company tagline is making innovation resilient. So we really specialize in deep tech industries and industries where the insurance market isn't developed, where you've got sort of early phase companies who need help bringing resilience to their business models. And the sectors we look at include obviously the space economy, which we're talking about today, do a lot of work with fintechs, digital assets, and a number of other areas.
So Andrew, as satellite infrastructure becomes increasingly integral to global connectivity, how do you see the evolving risk landscape for telecom and digital infrastructure providers?
Well, I think it's changed a lot in the probably last 3 or 4 years, and you only have to look at the number of satellites in orbit to grasp this. If you go back, let's say 10 years, there were a few hundred satellites in orbit. Today, there are about 13,000, and astonishingly, of those 13,000 satellites, more than half belong to Starlink. So that's obviously the satellite connectivity network run by SpaceX. So that whole area of satellite communications and the role that it plays in infrastructure used to be dominated by half a dozen sort of large geostationary satellites, Inmarsat, the huge operators providing services from 40,000 kilometers away in geostationary orbit. Those same services are now being provided by Starlink as the dominant player from 400 kilometers away. You guys in tech know what that means in terms of latency and so on. We're provided 400 kilometers away by a mesh of satellites rather than large pieces of infrastructure.
Okay, so what type of systematic risk do satellite-dependent service such as aviation or IoT faces from insurance standpoint?
Yeah, I mean, there's two systemic risks, or maybe potentially three if you look at it a slightly different way. The two main risks are space weather. So space weather is effectively solar activity from the sun. The sun goes through 13-year solar cycles. At the moment, we're at a very high point of solar activity, and will be for the next year or so. And solar activity can damage satellites very quickly and very easily through radiation and so on. So they have to take evasive maneuvers. So that's a real risk, and it's already caused losses of quite a large number of satellites over the last few decades. The second systemic risk is around space debris. So space debris are just chunks, usually of spacecraft or broken up pieces of spacecraft that are flying around in orbit. Now, that may not seem like a particularly big issue until you realize quite how big those or how fast those pieces of debris are moving. So to sustain a low Earth orbit, you need to be traveling at about 8,000 kilometers an hour. you're going around the Earth once every 90 minutes. And if you imagine just a tiny fragment, sort of a 1 centimeter fragment of metal from a satellite or a spacecraft, traveling at 8,000 kilometers an hour, that will go straight through solid aluminium very, very quickly. It'll break up other spacecraft. You then get, you know, a shower of debris that can potentially take out a whole orbit and make and make an orbit unsustainable. Now, that hasn't happened yet, and it hasn't happened in large part because over the last decades there have been a few hundred or a couple thousand satellites in orbit. Now you have 13,000 today, and depending who you ask, 50 or 60,000 satellites likely to be in place in let's say 10 years time. That's a risk that's been very theoretical, is beginning to become really quite real. So that's the second systemic risk. And then I think the third one is one that we really do need to mention. It's more man-made, and that is cyber attack. You know, every single satellite in orbit now is under fairly constant cyber attack. The level of cyber security is better or worse depending how old the satellites are. A lot of the satellites in GEO are sort of 15 years old or so. That's a rough lifespan. But those cyber attacks are going on every day by nation states, by private actors, by people who just want to see if they can do it, etc. So you've got a real issue there, a systemic through that medium.
Are there gaps in insurance coverages for enterprise that rely heavily on satellite-based connectivity?
Well, there really is. I mean, again, this isn't every insurance policy, but you know, I've spent a long time working with Lloyd's of London, which is of course the big global insurance markets, and they tend to put on on pretty much all of their policies what they call an infrastructure exclusion. So they will not pay out if the reason that you suffered a loss is because critical infrastructure, which often includes satellite infrastructure, fails. So if your business goes down, suffers a big loss because satellite comms have failed, that's an excluded risk in pretty much all policies written by Lloyd's of London. And the reason it's an excluded risk is because those insurance providers are worried that if the satellite infrastructure goes down, it will hit not only sort of one company that's been attacked, but all those different companies that have been affected by that issue. And therefore they'll end up paying an unsustainable amount of money. So that's a real exposure, yes.
And with increasing dependency on satellite enabled analytics and connectivity platforms, like how important is integrated cyber and financial risk protection for downstream service providers?
I mean, it's useful. In reality, if you're looking at cyber insurance, it's a sort of a three-step process, because the very first step of cyber insurance is to make sure that you're ready for cyber attacks in the first place, that you're actually cyber secure. And until you are cyber secure, you won't be eligible to. No insurer should provide you with cyber insurance. So it's getting you right in the first place is absolutely critical. The second step, of course, is providing that insurance cover in case you are subject to cyber attack. Now, there's an assumption pretty much in the cyberspace that everybody is subject to cyber attack, that you can't maintain the boundaries, i.e. you can't keep people out, but what you have to do is contain those cyber risks. And that brings you on to the third part of any cyber insurance program, which in many ways is the most important, and that's giving you 24-hour a day access to cyber response people, both from a technical, from a regulatory, and from a legal perspective, and that's what the insurance industry provides through cyber insurance. And it's not well used. It's not well used at the moment in space.
And what are the primary insurance challenges associated with, let's say, large-scale commercial satellite deployments today? Like,
well, I mean, in terms of the satellites themselves, I think the primary challenge is that the insurance markets are out of date. So there has been satellite insurance available for about the last 35 years or so, but it's been a market that reflects the sorts of satellites that are going up there. So it's been a market about insuring somewhere between 20-25 large geostationary satellites every year. And to give you an idea of scale, these are satellites that cost $200 million, $300 million, maybe $500 million, and they're huge capital investments, and they're investments by big global companies like Viasat, Inmarsat. They're put up there by Airbus or Thales Alenia, you know, these sort of household names. That's not the way that space is working now, particularly for, you look at Starlink, we look at other providers of Earth services. They're now working much more with constellations and meshes of much smaller satellites. Now, if you really wanted to, you could get a satellite up into orbit today for about $500,000. So compare that $500,000, $500 million. And that could be useful, but many of the satellites are, $5, 10, $15 million. And because of that, and because the lifespan in low Earth orbit is shorter, it's sort of 4 to 5 years rather than 15 to 16 if you've gone out to geostationary orbit. Because the lifetime is shorter, because technology is moving on so fast, each individual satellite is not really that important. What's important is that the constellation works as a whole. So the approach the insurance markets are taking at the moment to ensuring everything satellite by satellite doesn't really match the business models of people who are operating these constellations. So there's a real challenge within the insurance markets to move on from the old school model to one that reflects the new economic reality.
Andrew, as let's say the space is becoming more like a commercial platform rather than a government-led domain. How does this shift impact the underwriting models?
I think it doesn't change the underwriting models enormously, in the sense that we're not measuring risk in any different way. So if you are asking me to insure a satellite or a group of satellites, I'm really I only need to answer to one question. The question is, how likely is that satellite to fail in the year that I'm on risk? But what it does allow, if we call it the old days where it's governments and so on, where effectively you're insuring a satellite or paying out on a satellite failure doesn't make, even for $500 million, doesn't make much difference to the balance sheet of somebody like Boeing or certainly not to a government. In that sort of constellation model, they're actually suffering losses that could end the company because it's private capital. They're running pretty thin. They're still sort of fairly low revenue because they haven't built up the constellation too far. So they're looking for for different solutions that reflect their business realities, because they need to protect revenue. They need to, as much as they need to protect their capital assets.
So Andrew, we are also getting a couple of live questions right now. Can I take one question? There is this one question that has come up, for global enterprise deploying satellite as part of their network resilience strategy, how should risk transfer evolve across geographies?
I think that's partly a that's partly a regulatory question, but in terms of satellite infrastructure, I mean, if you're looking at geostationary satellites, they stay in one place in relation to the Earth. So you could have a geostationary satellite that, for example, covers India and presumably parts of Asia. You can have a geostationary satellite that covers South America, or take your pick. Once you go into low Earth orbit, these are all satellites that are moving around very quickly. It's just simple orbital physics. They go around the Earth about every 90 minutes. So every single satellite is kind of covering, it depends a bit on the orbit, it's kind of covering all of the Earth at any given time over various orbital cycles. So there's no geographical link between an individual satellite and the area that it covers. What does make more difference, I think, is where you put the ground stations. So the ground stations are the stations on the ground that the satellites communicate with. And I think if you're looking at network resilience strategy, when you're using satellite infrastructure, I think a key part of that is controlling those ground stations and ensuring that those are secure, because that's where your comms end up coming into.
There is one more quick question. So it is for industries like logistic or mining that depends on always on connectivity, how can insurance support satellite enabled operation in remote areas?
Well, in terms of the communications, I mean, I don't know if any of you guys have been on a plane and tried to log into Wi-Fi recently using the older planes. Well, pretty much all the aircraft that use Inmarsat. It's very slow. It's very clunky. It goes offline a lot. It's difficult to use. If you've been on a plane equipped with Starlink, so these are the Elon Musk's sort of 7,000 satellites. It's like being at home. It's a perfect connection pretty much all the time. And if you're looking at supporting remote areas, you're going to want to be on on that sort of system rather than something a little bit remote. And that's secure. It's reliable.
Andrew, coming back to the live session, What role does insurance play in enabling let's say, the scalability factor in terms of commercial satellite constellation?
Yeah, I mean, there's a question. There's a question of cost and scale. So, for example, if you're looking at large geostationary satellites, we can insure as a market. This is not Relm on its own, but this is Relm with every other satellite insurer up to about $500 million for any one risk. A lot of the larger constellations cost, massively more than that. And I think what the smart operators are looking at now is actually using insurance as part of a risk transfer solution. So, for example, back in one of my previous roles, we were arranging insurance for oil refineries. So that's a $8, $9, $10 billion capital project, and insurance will only go so deep on that. So the insurance markets were taking probably about the first $1.5 billion of the risk of those capital projects, but then it was going through the balance of the risks. The balance of the risks that the investors needed to be confident that were transferred. The balance of the risks went through the financial markets more generally. And I know the headlines of financial terms, bonds, insurance-backed securities, and so on. But I'm not the person to talk about the detail. But the core point is, when you're getting into multi-billion-dollar, rather than billion-dollar, but multi-billion-dollar projects, insurance is only part of the solution. It tends to sit at the bottom of the tower, but needs to be complemented by full use of the financial markets to provide that support.
And with the launch of vehicles and ground station capacity, like projected to scale rapidly over the next decade, how do these insurance products need to evolve alongside the infrastructure growth?
I think if we're looking at the satellites themselves, I think we need to match scale back on only insuring physical objects in space. We're not insuring satellites like in the same way as you'd insure your house, where you just care about one house and how whether it burns down or falls down or fails or whatever. We're actually backing business models, and so that's actually you're effectively putting insurance products in place to protect your revenues in the event of cyber attack, in the event of satellite failure, not just of one satellite, but let's say 20 out of your constellation of 100. You're looking not only, the current insurance models tend to be what's called ground up. So there's no deductible. So, if you have a car crash, you might pay the first, $50, $100, $200 of the accident yourself. So from an insurer's perspective, you're sharing the risk. That hasn't worked that way in satellite insurance. And again, once you start moving from individual satellites to whole constellations and business models, it's, you get into those more sophisticated conversations about how much of the risk do you want to transfer to the insurance, at what cost, how much do you want to retain yourself, and then rather than and that sort of in many ways makes the insurance cheaper and easier, because you're sharing risk. You've both got your interests are aligned in these constellations serving and as surviving and functioning, and as an insurer you're simply providing a backstop rather than taking on the whole risk yourself. So I think you can see further spreading of risk. You can see moving on to specific products around, we've mentioned space weather, cyber attack, cyber attacks, space debris, and you can see, as constellations grow bigger, having insurance sitting at the base of a capital market solution for those multi-billion-dollar risks.
As non-terrestrial networks it become part of 5G and future 6G ecosystem, how prepared is the insurance industry to support this transition?
I can speak only to the space elements of that. At the moment, people talk also, it's slightly off topic, but people talk a lot about sort of data centers in space, and they talk about communications from space, and they talk about Earth observation from space. If you think where we were with cloud computing, I mean, you'll tell me better than this, what, 15 or 20 years ago, where people were sort of suspicious about the cloud and not having their files all saved on their laptop or on their hard drive or backed up at work. And now we look at cloud computing is just a thing. It's part of infrastructure. I think space is going to end up in a similar place for both communications, data processing, data storage, where you're not really going to worry about whether your data is going through space connections, terrestrial connections, 5G, direct-to-device, and so on. It's going to be something that in time works seamlessly and gets forgotten about in the sense of being in the front of people's minds, just as unless you're very deep in the tech sector, nobody really worries whether their data is going through AWS or some other data center, or whether it's you're going through Google, or whether it's on the servers at work. It's just a thing. It's a service that happens to be provided by space rather than a space service.
And we have one more question. Shall I take that up? So with enterprise application increasingly relying on satellite delivered data, how could CISOs think about integrated cyber and infrastructure risk coverage?
Yeah. Well, if you look at the moment on the attack profiles of on spacecrafts, it's still the majority of attacks are on the ground state on the ground segment. So anything from your ground station, back through to the computers. That's still the main attack vector. I think I mean, certainly from an insurance perspective, but I think it's the same if you're a CISO. From an insurance perspective, we look at also evaluating risk. We also look at key suppliers. So we look down your supply chain. So if your supply chain includes, space infrastructure providers, then you should be using that or taking that into consideration as evaluating the risk. Now, in some ways, the space risk is lower because it's, satellites are 400 kilometers away. You have to have specialist equipment, ground station in particular, to access them. But in another sense, or two other senses, they're actually a higher risk, and a higher risk for two reasons. The first is, if you do have that ground station, you simply point your antenna at the sky, you can communicate with that satellite. You don't need to hack into some sort of connection. It's an open radio connection at the moment. Now, that may change in the next 5 or 10 years as laser communications become more common, but that at the moment is how it is. So that's a relatively high risk. Your satellite is open. The data coming out of it can be listened to, if not decrypted, at all times. The second the second thing behind that is that a lot of satellite infrastructure from a cyber perspective is pretty immature. Now, obviously, about half of satellites have defense applications, so there's a high level of security there. And most of the satellites have been launched in the last 3 or 4 years, but only last 3 or 4 years are highly secure from a cyber perspective. But if you're using, if you're a CISO and you're looking at sort of 10, 15-year-old infrastructure coming from the sky, then I wouldn't necessarily make the assumption that there was adequate cybersecurity in place for that infrastructure. And that's a question I would be asking of my supplier. What equipment to use, what is the security you have in place, etc.
There is this one more thing. Are traditional insurance models sufficient for enterprise using satellite for disaster recovery and network redundancy?
I mean, yes, I guess. I mean, there's a couple issues. One is obviously you've got latency when you're using the geostationary satellites. You don't have that to such an extent with Starlink. You've got capacity issues in terms of the amount of data that can be transmitted. It's still over radio waves and therefore relatively low. It's the radio transmission is like dial-up internet compared to the fiber that we have now. So you've got issues. It's very much a compromise, but as more, certainly with Starlink and as Amazon's constellation Kyber and there's 2 Chinese constellations, as they come on board and give options for that high speed connectivity, then I think it will become very reliable.
So, Andrew, looking ahead, how critical will insurance be in ensuring a long-term sustainability for commercial space economy?
I mean, I think it's absolutely vital. Like in any other industry, every terrestrial industry has its levels of insurance, both in terms of capital costs, infrastructure, service provision, etc., etc. No different in space. And I think, just as I said earlier, the cloud computing is now just a thing that nobody is particularly concerned by. I think the services from space over time are going to be seen just as services. And indeed, that's one of the challenges for the space industry as a whole, is they say, we've got all these capabilities from space, and their customers are saying, well, it's from space. That's a little bit worrying. It's perceived still to be high risk. If it was just taken as as just a service, then it suddenly just becomes more a part of sort of day-to-day business. And the insurance, the fact that you're backed by it, the fact that people can have confidence that if something does go wrong, they've got recourse against you is important.
And what risks do civilian passengers pose in context of commercial space tourism?
Yeah, I think that I'm going to be. It's not even controversial. There's a bit of a sleight of hand, because if you look at a lot of the people who've been into space, so-called, recently, and they've done what's called a suborbital flight. So they've gone up above traditionally the line that says that you're in space is called the Kármán line. It's 100 kilometers above the surface of the Earth. So a lot of the flights that you've seen on TV with celebrities and so on, they've gone above the Kármán line. So they've gone above 100 kilometers and come back from space. They've never gone into orbit. And in many ways, I mean, that's just a high flight. So what medical issues and so on, crashing to ground, flying on a rocket rather than on a on an airplane. I guess there are risks there.
I believe there is some issue with your camera, Andrew.
I can still see myself on the sources, but the picture's gone from your end. There we go.
Is it fine? Oh, yeah. Okay. Okay. So,
sorry. So sorry for that, but yeah, but I think if you're talking about full space flights, you're going up, for example, to the International Space Station, going into orbit and so on, that's still a long way in the future. And bluntly, the billionaires who will be able to afford to do that, at least in the short term, probably won't require insurance and probably won't be able to get insurance. As you know, if you talk about key man insurance, it will be hundreds of millions of dollars of cover for a CEO of a corporation in case they got injured or lost their life in space travel. So I think that's a little bit for the future.
Okay. How should insurers evaluate human space flight risk in comparison to payload-based missions? What's your take on that?
Well, it's a bit sad because you've of course had the disasters with the space shuttle, but very few payload-based missions. So very few human missions have problems. Very few human missions fail, and they've got backup plans in case something does go wrong. You remember last year there's a mission from the ISS where the return capsule had some difficulties, so they waited on the space station for another 2 or 3 months and got rescued by a Dragon capsule. So you've got far more redundancy built into human space flight than you do have built into into payloads. And payloads fail fairly frequently. If you're going experimental payloads going into low Earth orbit might fail 10-15% of the time. It's quite a high failure rate. That would never be acceptable for human space flight. So you've got much more redundancy built in. You've got much more care taken to make sure you get things right every time, because of course the price of getting things wrong will be absolutely disastrous. So I think it's a much more secure, and rightly is a much more secure system than payloads.
Okay. So what we want to know is that, you guys recently introduced this Omega Space as a combined financial, professional, and cyber technology policy for enterprise, leveraging space-based data and signal. Could you walk us through the problem this product aims to solve?
Absolutely. So this comes back to a point I've made a couple of times earlier about space shouldn't be very different from any other environment. Services from space are ultimately just services that happen to be provided in a certain way. Now, there's a lot of companies that are involved in what we call downstream services from space. So they can, using space-based data, they can tell you, for example, where your ships are. If you're in the maritime industry, they can tell you if you're in the oil industry where the leaks are on your pipeline. Methane leaks on your pipeline from space. They can tell you if you're a financial trader how many unsold cars are sitting in Tesla's car park just outside the factory from space without going there. And that's useful data that can trade back into the stock markets. Now, the people purchasing the data, the customers of that data, don't, or at least I don't really think should, particularly care that it comes from satellites or other places, rather than somebody going around with a clipboard. Clearly much more efficient, but they need to be confident that both the data is correct and the analysis carried out on the data, which is often the tricky part. The analysis on the raw data is correct, because they're going to be acting on their advice. If they see a certain number of unsold cars, they're going to trade up or down the stock price of Tesla. If they're told there's a methane leak here, they're going to go send the people on the ground to that place to find the methane leak. So the advice has to be right. Now, in any other environment, if you're relying on an engineer, you'd expect that engineer to be insured against its insured against its liabilities if they're negligent. So you expect your lawyers to be insured against their liability if they're negligent. And why? And the answer to why is quite simple. You're relying on those people's advice. You're acting to your own detriment if things go wrong, and you want to be comfortable that there's money in place effectively to pay your loss if the advice goes wrong and it costs you money. And it's the same in space. So our Omega Space product is exactly for that. It's to ensure the providers of those space services for effectively the accuracy of their data, or the non-negligence of their data, their analytics, etc., so that if giving confidence to the customers who are relying on that provider, if things go wrong, there's our regulated capital sitting behind them, so there's money in place for that to get them paid back. And that's the purpose of the policy. And that particular policy, without getting, I know this isn't an insurance audience, I don't want to bore people too much, but what we've done is we've drawn together traditional cover. So if the advice is wrong, it doesn't matter if it's caused by a cyber attack, by a fat finger error, by bad analytics, by a negligent coding, or whatever it may be. As long as the advice is wrong, we will cover those liabilities. So that allows the company to make good its customers, which it has failed, using our capital.
And how is Nova Space positioned to support firms operating within the space supply chain, particularly from an errors and omission risk perspective?
Yeah, so that's sitting at the other. So Nova, if Omega Space is aimed at people providing services from space, Nova Space is aimed at the supply chain. So in most cases, in the space supply chain, you're talking about solar panel parts of spacecraft, solar panels. We're talking about consultancy services doing heat and power budgets and so on. Most of those services are provided on what's called a non-recourse basis. That means if something goes wrong, it's actually the customer's problem rather than the supplier's problem. And that makes it very difficult. That makes it very difficult for particularly small and medium-sized companies to break into that space, because people would rather go to well-known names, like say Thales Alenia, Airbus, Boeing, all these big giant corporations, because they know and have experience and have trusted that their products will work, I hope, every time. Now, in fact, they don't, but in theory, they've got good records. So what this product does is it allows those companies to sell its products in the supply chain on a recourse basis. So they can say to their customers, look, if things do go wrong with my product, if it doesn't function the same way it's intended to function, and as a consequence you suffer a loss, you've missed a launch because your spacecraft isn't ready in time, or it's caused damage to other parts of the satellite, you can have recourse against us as your supplier. And we are, even though we're a young company, we're good for the money. Why are we good for the money? Because we're backed by insurance, and that gives them that sort of competitive advantage in the supply chain as against the giants who still dominate the industry.
How is Relm adapting its Sigma product suite to address the evolving needs of space economy participant, from an early stage innovators to more established operators?
Yeah, Sigma is something we've offered for a number of years now across all the sort of innovative industries. And look, when you're a young company, you're going through your Series A, Series B sort of Series A, Series B funding rounds, you're very unlikely to have a dedicated insurance buyer, let alone, or not even a dedicated, risk manager. And so what that does is Sigma is it's kind of a one of everything cover. So it's everything you would expect a young company in an innovative industry to require. And we've taken something we've offered to fintechs, to AI companies, something that we've offered to digital assets companies. We've taken that and adapted it to the space sector. They're not big changes, but it brings it a little bit more in line with the way the industry operates, covering satellites up to the completion of final testing, for example, in the supply chain. But it's that sort of one-stop shop, relatively inexpensive, and just make sure that your business is properly protected for the day-to-day risks that every business has, with a little tweak to recognize that you're in that particular space industry.
Andrew, we are getting so many questions from users. Shall I take one or two? There are so many users. Yeah. So there is this question, as a satellite hardware supplier, how can insurance solution like Nova Space help mitigate performance and contractual liability risk across deployments?
Well, let's be honest, that's exactly what it does. So if it's called a technology error and emissions form, and in line with insurance industry standard. It covers non-deliberate contractual breaches. So I'm clearly not going to underwrite and pay for your deliberate contractual breaches, but if you have accidentally failed to meet the performance criteria of your component of your satellite, etc., then that's exactly what Nova Space does cover. It carries on up to the point of completion of final testing. The reason is, once you've fully tested your satellite on the ground, and this is heavy duty testing. This is taking it to minus 160 degrees and up to 140 degrees, full vacuum, etc. Once you've completed that, effectively you accept the satellite. But we will ensure those components right up to the completion of that process, and the satellite's ready for integration onto the spacecraft, onto the rocket.
And there is this one more, which for vendors involved in launch operation, how should liability, everyone is asking about this liability, but liability be structured when working with multiple upstream and downstream stakeholders?
Well, if you're looking at launch operation, and it's a broad subject. So launch operations, I mean, I don't know if we're talking here the spaceport or the spacecraft or the rocket, but if we're looking at the spaceport, that's usually there's usually regulatory requirements. So whatever liability you may have to people on the ground is going to vary very much so from one jurisdiction to another. So it's probably not worth being general on this. If you're the launch vehicle provider, so it's your rocket. One of the big challenges is to get your first customers on board. And I'm sorry to go back again to SpaceX, but they're so utterly dominant in this field, it's hard not to. SpaceX Falcon 9 has launched 600 times roughly now and has failed 4 times. That's absolutely incredible. It's off the scale, larger and bigger than anybody else by miles. They did 85% of all launches, 95% by tonnage last year. So they're sitting in their own world. You're a young guy, about 45 to 50% of first launches fail, about 25 to 30% of second launches fails. Once you've got 3 in a row, you're probably on good territory. But one of your challenges is to get people to put their first spacecraft effectively to put their investment on the top of a rocket that's not proven. Now, insurance can play a role, but we don't underwrite science experiments. So from an insurance perspective, once you've got 3 in a row done, and that seems to be the sort of magic number for space launches. Once you've got three in a row done, then we're ready to insure you. We're ready to insure your payloads will be more expensive than Falcon 9, but it's doable. I think the challenge for the launch industry is how to get through those first 3. And certainly, I've had discussions with regulators and government representatives saying, look, if you really do want sovereign launch, that's the sort of thing you're going to have to underwrite yourselves, because the insurance markets won't do it.
We are still getting a lot of questions from space vendors, Andrew, but maybe we can take it up. You want me to take it up right now, or can we do it next time? Probably we can set on a call for next time.
I've got a little more time, but as you feel.
Okay, so there's this one. Can insurance innovation become a differentiator for emerging vendors looking to partner with global telecom infrastructure providers?
Yes, because you can sell your goods, whether they're physical goods, infrastructure, or technology, or whatever. You can sell your goods on a recourse basis, and you can explain to them that the recourse is backed by insurance. Now, I've worked, again, to expand this a little further, I worked quite a long time with fintechs. And if you're a early mid-stage fintech and you want to supply your technology, usually software, to a tier 1 bank, your JP Morgans, Goldman Sachs, whoever, take HSBC, take your choice, they would their procurement, and it's more sophisticated, always requires you to have insurance in case your stuff lets them down. They need recourse. And I think the same applies in space. What's different in space is the insurance industry isn't as mature. We hope it within Relm. We're at the forefront of providing those sorts of solutions for those companies. But it should be a procurement requirement.
Andrew, thank you so much for giving us an entire brief about what exactly is the things, and thank you for joining us today and sharing your insights. And to our viewers, thank you for tuning into TelecomTalk Live. Stay connected for more such conversation. I know there are still so many questions are popping up. Maybe we can take it in the next set of conversation, probably once we get Andrew on a next live session. Thank you, everyone. Thank you so much, Andrew.
Thank you.